Well, usually when we talk about futures in focus, we're talking about oil or metals or soft commodities. But today, let's focus on water, which has made big headlines the last few months because of raging wildfires in California and elsewhere. And it's something that's grabbed the attention of regulators, including Commissioner Behnam. Commissioner Behnam, we'll talk a little bit about CME offering water futures contracts for people to trade later this year in a bit. But you kind of got the ball rolling here when you commissioned a study. You led a study examining how extreme weather events pose a risk to financial stability. What was the biggest takeaway for you?
Thanks, Scarlet. I convened a group in 2019 and asked a diverse group of market participants, which really represents a huge part of the economy, to produce a report and provide recommendations regarding the intersection between climate change and financial market risk. The three high-level conclusions are that climate change poses a major risk to the stability of the U.S. financial system and its ability to sustain the economy. Second conclusion is U.S. regulators must recognize this fact and should really move urgently to understand and address the risk related to climate change. And the third, which I'm most excited about, is that the financial system and financial markets can be a great tool to hedge the risk that we're going to be facing because of climate change, and more importantly, be a catalyst for investment, for economic productivity and economic growth for the years to come as we transition to a net zero economy. On a more specific level, I think it's important to add there were 53 policy recommendations. And within those three broad categories, which I just outlined, some of the specific recommendations that are important are stress testing financial institutions under different climate scenarios in the short term, the medium term, the long term, having better disclosures. And this really goes to the growth of the ESG movement and the demand from the retail side for ESG products. How do we as regulators provide comparable and reliable disclosures to both the investment community and also the regulatory community?
Okay, I'll jump. Scarlet, you go.
No. So how would something like water futures help provide clarity then to investors and therefore stability to the financial system?
Well, water futures are to me, it's not a surprise that we're seeing this. And what it really does is indicate that there's a strong demand from the end user community to have price stability with respect to a very valuable commodity, clean water and fresh water. This particular contract, as far as I know, tracks the price of water rights across 5 of the largest regions in California. And if you think about California, it's the largest state by population in the country based on 2019 statistics. And also in 2019 statistics, California had the largest cash receipts for all agricultural commodities. So you have a huge population and you have a huge agricultural sector, which needs a huge demand for water. And given the demand for water, given the climate change events that we're seeing, and you pointed this out with the wildfires, price stability is key for economic growth and economic stability. And the fact that these end users are coming to the exchanges and saying we need a risk management tool because price stability is key, and we are really uncertain about what's going to happen in the future, is a clear indication that both the growth in population, the demand from agriculture, and then most importantly, the role that climate change is presenting for core resources like water is an issue that we have to address.
Commissioner, the question I want to ask is how liquid is this market, which is a bit of a joke, but it's actually got a serious undertone to it. Is this just going to be for users of water, or do you think financial actors within the financial community will also use this as a hedging tool as well for kind of wider environmental risk, and as a result of which they bring that extra liquidity in and provide the opportunity for the market to be more and more useful?
I think that's right. It's hard to predict where the contract will go. I would say this, Guy, at the very onset, these contracts really are developed over a long period of time from an economics perspective. The exchanges work with the end users to structure the contract. They also work with liquidity providers, which really goes to your point. So you're going to have the end user community and you're going to have the liquidity provider community participating in the market so that it's healthy, it's robust, and it's operational, and that you have true price discovery and risk management that matches the underlying cash market in this case. So I think there's clearly going to be an end user community that needs to manage the risk and discover the price, but you're also going to have liquidity providers participate as well.